Welcome back to the MoneyPig podcast, brought to you by Goodwin Investment Advisory, where our mission is to lead people to financial peace, independence, and generosity. I'm your host, Reed Trigo, and today on the show, we are joined by financial advisor Ray Brown, right here from GIA, for a discussion about Social Security for freelance workers. Ray, it's good to have you here.
Hey, thanks for having me again.
All right, this is good. We usually talk about fun things.
Yeah, this today, what we're going to talk about seems a lot more serious, not as fun.
I know, but we'll see what we can do here. So the conversation is about Social Security for freelance workers, because like you look over these past 5 years with Uber and Lyft and DoorDash and Instacart, there's a lot more gig workers out there who are technically self-employed. Except maybe in California. I don't know. Did they do so? I don't want to get into that, but I don't.
Way too deep there. Yeah, not sure what's going on over there. Yeah. Too much. Go back.
We have rules. And then like contractors, there's everybody, everybody can fix stuff.
You need some tile. I could do tile.
You could do tile.
Everybody's doing tile.
You just look it up on YouTube.
I'm a master plumber. Yeah.
Yeah.
I can Google it.
So I feel like there's a ton of self-employed people. And so what do we want to do is talk about the considerations they need to make regarding their retirement savings and regarding Social Security savings in the future when they become self-employed.
Absolutely. Something to be aware of. And I think it's a part of the, the great American dream, owning your own business. Folks naturally want to work for themselves. They kind of, you're seeing a lot more of it, like you said, Reed. And I think it's just a good thing to be aware of is just how does Social Security be affected by that? Whether you're working a regular person job, quote, W-2 employee, doing a regular person job, or if you're running the business yourself and creating your own contractor income. And that could mean anything such as, like you said, DoorDash, Uber Eats, your delivery drivers, anything where you're being paid 1099 income as a contractor or a business owner. Makes the situation a little bit tricky.
Yeah, exactly. So we are going to talk a little bit about taxes as well, but neither one of us are qualified to talk about taxes. Taxes are
CPAs. We're not CPAs, and we don't know the full situation. And so we can give, general advice that appeals to the masses, but every person's situation is unique and different. There's certain circumstances. Numbers change each year. So if you're listening, we're currently in 2023. If you're listening to this later on, numbers have all changed. And hey, that's why we've got job security, because these numbers, they make this stuff so complicated. We get to dig through it and decipher it and consolidate and condense it for you guys. And that's why we're here. So
that's exactly right. So to start out, I thought what we should do is just talk really basics on how taxes sort of work in general, high level for a W-2 employee.
Yep.
And then we'll move to when someone becomes self-employed.
Okay.
Very cool. So a W-2 employer, you have income tax that's taken out based on estimates for what you're going to make for that year and the marginal rates that you'd be subject to. But we're really talking about the payroll tax side of it, because that's the part that goes into like your Social Security benefit down the road. How's that work?
That's right. So there's two components that are separate from the income tax. We all pay an income tax rate. That is, separate conversation there. In addition to the taxes you pay for your income, you're paying what's called the FICA tax. So that is composed of Social Security and Medicare. Two pieces right there. 6.2% goes into Social Security. And then the 1.45% goes to Medicare. We group those together. So I'm calling the whole situation Social Security 7.65%. Really, it's Social Security and Medicare, but let's just keep the numbers simple. You pay your income tax and you pay 7.65% towards Social Security for your future.
Right on.
Whether you want to or not, we're going to pull it. We're pulling it from your paycheck and putting it into this pool of money, and you'll get it down the road with an asterisk.
Probably, right?
Yeah.
Okay, and that's 7.65%, but then the employer.
That's correct. So your employer is also paying those same rates into it. So altogether, it's 15.3% going into the pot. This is for your Medicare and for your Social Security. And so, yes, as an individual, you pay 7.65% from your paycheck. And your employer is doing the exact same amount on your behalf.
Okay, so when someone has this entrepreneurial spasm and they're like, I want to be self-employed, well, they're going to have to be aware of a few things that happen. And I've done this. So But I did it, and it was funny. It was like 20 years ago. I did it, and I didn't understand anything about taxes, or that was like my kryptonite then, still is. And so I didn't really even think about how this was going to change any of this.
And at first it's kind of exciting because you can then go out and you have that sense of, okay, I've escaped the payroll machine. I go out, I do a gig, I'm getting paid, $5,000 and no tax was withheld from this check. I can go put it in the bank. That's your first, kind of starting out in something like that.
Mayday.
Right. So then it comes tax time and you've got to then realize you now owe income tax on the profits that are generated through your business, as well as what we call self-employment tax. Mm-hmm. And self-employment tax is going to be both of those components for Social Security and Medicare times 2. So you're paying it for your own personal benefit. And then you're also now, because you're self-employed, you are now also the employer. So you're also going to pay 7.65 there. We add it together, it's 15.3%. That is, quote, self-employment tax. That's for your Medicare and for your Social Security, and you're going to pay both as a self-employed person.
So the good news is, even when you're self-employed, you are there is a contribution being made to Social Security to keep you eligible and to factor in your future Social Security benefit.
Yes.
Right?
Yep.
That's the good news.
Assuming you earn more than like $400. Yeah, there's a certain small minimum threshold, but yes. But if you're earning income and you're paying into the system, then yes, based on those wages. And again, if you're self-employed, this is going to be determined based on profits. So if you go out and you do a plumbing gig, or let's just say like, I'm going to retile your shower and I'm going to charge you $10,000 to do it. Well, I had to spend $4,000 on tile and I had to spend $2,000 on my assistant that came and worked with me. And so now my net profit after all is said and done and all the expenses and no. Say we get down to $2,000 as profit. Mm-hmm. Well, that's my net business profit. And that is what I'm responsible for the tax on. So I've got all this income minus the deductions, the expenses that I had incurred in order to generate this profit. Now I'm subject to self-employment tax on that balance.
Absolutely. So, but there's another thing that self-employed people sometimes do, and they will figure out, well, I should really buy, I use this example because it's a real one, tickets to the Atlanta Falcons, and we should probably take the family. That sounds like a work expense to me. So we're going to get Goodwin. It's going to be like $4,000 or whatever. Mm-hmm. And that is a deduction from your income. From which will not be calculated into that Social Security bucket.
Absolutely not. Yeah.
And so self-employed people can really get that income, the net profit way down if they try.
You could. And I think it's important to remember that, yes, the amount of your benefit later in life would be affected based on the deductions that you had. The more profitable your business is, well, then yes, the more taxes you're going to pay, income tax as well as self-employed tax for your future. So yeah, if your business is only making, all right, we, made $200,000 this year and expenses were $190,000. It's like, all right, good luck. Qualify for a mortgage down the road. It's going to affect a lot of things. Right. And so we do encourage folks to always be truthful and honest with their accounting and to keep your numbers tight, keep them real. And, but then again, if I have to hire an assistant or I have to go buy tile, I certainly don't want to pay tax on those legitimate business expenses. That's right. And so by all means, claim the deductions that are appropriate.
That's exactly right. I know. Okay. Here's a scenario. I know of a guy. I don't know him. I know of him.
Okay.
Who pays his workers in cash. So when the bookkeepers see this money come out of the business, that should be a labor expense to that business.
Right.
He's taking the cash. He's not telling anybody what he's doing. He's paying his workers in cash. So what's happening is that money that comes into the business, he's actually paying taxes on it.
Right.
Even though he should be taking it as a labor deduction expense.
He's doing his employees a great, great favor. Also, what is his name? We're going to have to go pick him up. He's going to jail.
I'm not going to. I don't know.
He's out there.
I happen to know his bookkeeper.
Okay. Well, yeah. So, I mean, it's true. A lot of folks try to get creative with this. I'm going to try to eliminate my taxes. And hey, the IRS system, the way it's wired, they encourage you to take advantage of creative opportunities. You can navigate the system, and we help clients with that. We're not CPAs, but we can truly help, look for opportunities and ways to save. And there's so many like what ifs, like, well, what if I reduced my business income to this versus that versus there's just so many little creative levers that we can pull. And, but we just always want to do that ethically and with the eye on the prize. And
yeah. And there are a lot of people who are like, I feel like I'm paying too much in taxes. Well, you make a lot of money. You're going to pay more in taxes. People just feel that way. That's kind of the way it goes. And they think that self-employed people get all these tax breaks. Well, we end up paying a lot of taxes too.
Yeah. And if you have a quote, normal person job and you're a regular, plain and simple W-2 employee, you see exactly what's coming out of your paycheck. Well, when you file as a self-employed person for the first time, you see that line. You don't see this unless you file as self-employed and have this, Schedule C income from a business. What the heck is this self-employed tax? Why am I being penalized for, creating a business? And it's like, well, you're not. This is the money that's set aside, and you're contributing into the Ponzi scheme that is Social Security. It's the greatest. Yeah. Yeah,
it is the greatest. Yeah. But you actually said, as a W-2 employee, you see this money coming out. I think they don't. And that's the problem. They don't see it coming out. It's just withheld. They get their money in the bank, and then they become self-employed. And all of a sudden now every quarter after their first year, now they have to start writing a check every quarter instead of having it withheld from anything.
Right.
And so that is what freaks people out. Freaked me out a long time ago.
Well, you know what else too, Reed? It's nice when you're a W-2 employee because you're getting the check and you know that your income taxes have already been withheld. Most folks by default withhold way too much income tax. So they get the big tax refund at the end of the year and they're like, aha, my CPA did good for me. And that's a whole nother story there. We can talk later about tax strategy around that, but it's a common misconception is that a refund is money that you're getting. This is your money that's you've overpaid and it's an interest-free loan. And so that's a myth that we have to kind of break for a lot of people.
I don't pay taxes. I get money back at the end of the year.
Yeah. So when you're W-2, you get your money and it's yours to keep because you've already taken all these things out. But when you're self-employed, you get the money and you've got to be disciplined to set aside a certain percentage for your income tax as well as that self-employment tax.
And we learned that. We get a check, 25% goes into our high yield savings account.
There we go.
For next year. And it feels like a lot.
Yeah.
Why am I going to have to part with that money? Because I am really going to want it in April. I'm going to need it.
Yeah.
So
it's very true.
Yep. And so, okay. So let's talk about that. This self-employed people need to be mindful and take into consideration what their retirement's going to look like. And what their Social Security contributions essentially, which I wish they were, but what that's going to look like. But the future of Social Security is what? Guaranteed? Is that what we would say?
Well, it's tricky. It's not. I'd say nothing in life is ever guaranteed. I mean, technically, the value of the dollar is backed by the full faith and credit of the United States. It's like. I'm of the opinion, again, just my opinion here, and I think I share the same sentiment as a lot of folks in this industry do, is that Social Security will always be there. Will it be the exact same that it is right now? Probably not. It's changed a number of times in history. And Reed, you were telling me there's a new disclaimer that says, Social Security is currently funded through year 2034.
Yeah.
So we're about 10 years out.
Hey, look, you go to ssa.gov/thereforme.
Right.
ssa.gov/thereforme. It's will Social Security be there for me? And right there in the bottom, it says there's a calendar with a date, 2034. Right. The combined yada yada trust fund will be able to pay all benefits in full and on time until 2034.
Yeah.
That is 11 years.
So we've got 11 years we're funded through. And what this means,
let me add one thing to it though. And then it says, thereafter, we'll still be able to, they're really excited about it. We'll still be able to pay 80% of the benefits that you're due.
Right. Based on the current situation. We talk to people a lot about this because we have so many people that come in and they'll say, I don't think Social Security is going to be there for me. I don't care what the statement says I'm going to get. I don't want that to be a part of my plan. And we can completely plan their retirement without that. If you get Social Security, it's going to be icing on the cake. It's not going to be the whole cake. And so, of course, folks are, even people that are not, nothing to do with being self-employed. If you're working a regular job, you're saving, you're paying into a 401k, You're funding your Roth IRAs. You're building up your retirement assets to use for your future. You're grabbing the reins on this thing. Like, you're not going to sit back and say, oh, Social Security is, going to be there for me. In fact, on the back of the statement, I'm looking at mine right now from 2022, and there's a disclaimer on the back, and it says, Social Security benefits are not intended to be your only source of retirement income. You may need other savings, investments, pensions, retirement accounts, and plans to make sure you have enough money when you retire. So your question, Reed, will it be there for us? I'm of the opinion that yes, there will be some form of Social Security in the future. I don't think it will ever go away, because that would start, massive civil war here. Right. It's like, I've paid into this, my entire life so far. And it's like, that money is there, got to be there for me. It just may not be exactly what you see in your benefit statement. But Social Security has changed a number of times in the past. I forget the exact count, but it's between 10 and 12 times, in the past. I don't know the exact statistic. I don't want to quote that, but there's levers that can be pulled. There's small changes that can be tweaked to dramatically change the environment. And that's going to need to happen within the next 11 years. So that'll kick the can down the road a little further.
I am pretty sure when I want to start taking Social Security, at least unless things change, I will, my best bet is 80% unless something changes. Your options are worse.
Oh gosh, yeah, a little further down the line for me, but it's a politically driven system, and I think we joke about it. It is a Ponzi scheme, and that's just not to poke too hard at it, but it's like any good pyramid or Ponzi scheme, it's like the money that's coming in from folks that are working today is paying for the retirees that are retired now and need the income. So so there's that. I think one wanted to also point out with self-employment. There's a few items, and I should say with any employment, just in general, there's a few things, few creative ways we can earn money that are not subject to Social Security tax.
Let's go with that. All right.
Might want to jot these down. Just pointing it out there as kind of an FYI. Dividends and interest from stock. So your appreciation, your capital gains, dividends, that income is not subject to Social Security.
It's taxed as dividends and capital gains.
Right. You're paying tax on it, but it's not going to come into your calculation for your Social Security benefit.
Awesome. Good.
Real estate income from rentals, rental property income, that kind of skips under there. Interest that you're earning on loans. And of course, any kind of like limited partnership and LP type arrangement, not subject to Social Security. Of course, taxable events, but don't mess with the calculation there for someone's benefit. So
yeah, we were talking about this. All the rage right now. Go on TikTok and listen to all the financial wisdom there. But it's all these people who I bought 6 rental properties by the time I was 26, or probably more than that, 100 of them. But if those people, okay, so you can make a lot of money, whatever. You can lose a lot of money. But if all of your income is from rentals, you have to be very intentional about putting money aside, because that is not subject to any of the FICA.
Right. Yeah. And it is your wages. So it's earned wages is what's really hitting the FICA and, the Social Security calculation. So yeah, if you're a plumber or you're a contractor, you work for yourself, you do these things, you earn a fantastic income. The question to ask is, what am I showing as a profit? It's hard. It's easy to go out there and say like, oh yeah, I made $300,000 this year, working on people's AC units, but what did you spend? You're writing off your gas, you're writing off a truck, you're writing off all these expenses, the equipment, the tools that you're buying, the materials. What's your bottom line? And so that magic number there is what is going to be subject to that self-employment tax. And you're right, Reed. If you love rental real estate, it's a fantastic source of income. And if you're cash flowing and bringing in income today from those properties and living on that income as if, hey, this is income that I'm making and I'm going to use some of it and spend some of it, save some of it, whatever, you got to be mindful that number, that extra little icing on that cake is not coming into the calculation for your future benefits.
Yeah, and I think this weaves into another topic we should do on another show, but I just see in my role as a business consultant, I see a lot of sloppy books. Businesses that keep really sloppy books, and my wife being a bookkeeper, she's also run into a few things, and so it's just super. It's interesting. Another topic.
I think that could be a great future topic.
Yeah.
To talk about. I've talked to some, I've got a lot of friends that are my age that have side hustles and they have, main hustles, general contractor. And these guys do great work and they do good. But when I ask them questions, was trying to help a friend recently figure out, like, does it make sense to get you going as an S Corp? Like, you're making a lot of money. It seems like, what are you paying yourself? And just, he doesn't have the answers. And I think a lot of folks like, oh, I don't know. It's whatever's in the business bank account. That's my account. And it's like, So tightening up those books, let's treat this thing like an entity. And you know what? I think it's kind of cool to nerd out. This could just be me.
Uh-oh.
This could just be me. How dare you? But I kind of like the idea of like metrics. What is my true profit this year?
Say that again.
Metrics. Yeah.
We love metrics.
Wouldn't it be kind of cool to know down to the dollar, like what did you actually make this year and what's your profit? How much did you spend to create this? What's your return? And it's like, you got to have tight books in order to figure that out. So
yeah, it's amazing. Okay. So the last thing then we want to talk about is, yes, it's, I guess, important to participate in the Social Security system. It's something you need to be aware of. But as you're doing the rest of this on your own, because Social Security is not going to be your only source of retirement income. You do the rest of it on your own. There are options and we work with clients to do these. So go over a couple of those options.
Yeah, I think, there's great options out there and this applies to whether you're self-employed or not. You kind of went over that disclaimer earlier. Social Security is not the whole picture. It's a tiny, tiny layer of icing on the top. And so, for a lot of folks currently, it's a substantial source of retirement income. It grows over time. And so it serves an important role as you're trying to figure out, how do I replace the income that I'm used to earning from a job? And, it essentially offsets the amount that you need to pull from your retirement assets, kind of solving for that variable of, I need X amount to live on. Social Security's paying me this. Therefore, I need to now pull from my retirement savings Y in order to get to kind of the net there. So for anyone, we talk a lot about Roth IRAs here. We talk about, folks that are working a regular W-2 job, saving in a 401k. It's tax deferred. Get the money in there, or you can do a Roth 401k. For folks that are self-employed, I think you got to kind of rise up a little bit higher, realizing that depending on how you do your accounting and your books, realize that only your profits are considered your income in terms of Social Security. And you may have a little bit greater of a role to play for your own retirement future than someone who has a regular person, quote, job earning, where a lot of times 401ks are automated and you don't have to think about this stuff. Social Security is based on your true salary and your true wages that are there. For someone that's self-employed, there's two great options. There's a SEP IRA and there's also a self-employed 401k. They're both tricky. They're both, the numbers are, they work a little bit differently. There's some considerations to kind of think around. It depends on, whether you're doing this as just a sole proprietor or if you've got a couple employees working for you. How does that affect it? How generous do you want to be with your benefits for the rest of the team? There's a lot of stuff to think through there. And there's contribution limits, but you can put, roughly like 25% of your, income that you're paying yourself can go in. We don't want to get too deep into the, down. We could go down a rabbit. Let me back up. Yeah. Stop. I started seeing the numbers. Yep. But yeah.
Started seeing my eyes.
Oh, gosh.
You make a great point. And this is why, it's a great idea for someone who's thinking, I need to be self-employed and I have an entity or an S Corp or LLC or whatever, to meet with the financial advisor too. We can help them, somebody with some good tax knowledge too. We've got that here at GIA in spades. We can help them, guide them through it.
Strategize. Yeah, we want to make a plan. And a lot of times this is one where, especially for folks that are self-employed, you want to chat with a CPA as well. We need to understand a lot of times business owners, hey, you're good at different stuff. The CPA is good at the books. And so we want to look at, some true situation. And so you go be good at plumbing. I can't do that. We can do this. And so you're just better at something else. That's totally fine. So
you have skills in other areas and so do we all. So that's great. Thank you so much, Ray, for your time. And I always like to say, as financial advisors, we manage and rebalance portfolios, right? That's kind of the big thing that we do. But the unique value is that we work to understand our clients' individual goals, so we can have these types of planning conversations that are so personal and unique to each individual. Ray, Always appreciate it.
Thanks again.
Yeah, it's awesome. Hey, and remember, if you're enjoying the show, rate and review us wherever you get your podcasts. And if you have a question you want us to answer on the show, email it to us at moneypig@goodwininvestment.com. We'll catch you next time. Thanks for listening.
The MoneyPig podcast is hosted by Reed Trigo. Goodwin Investment Advisory is a registered investment advisory firm regulated by the Securities and Exchange Commission in accordance and compliance with security laws and regulations. Goodwin Investment Advisory does not render or offer to render personalized investment or tax advice through the MoneyPig podcast. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice.